Welcome to the Zions Bank Economic Update. I'm Deb Speed, and joining me is Robert Spendlove to discuss the Fed's recent decision to raise rates. Robert, why don't we begin by having you explain what happened at the Fed meeting this month?
So the Federal Reserve Bank raised their short-term interest rate from 75 basis points up to 1%. Now, it wasn't a surprise. Chairman Yellen had been signaling it for several weeks, and the markets had essentially priced it in. They had said there was a 95% chance of it happening. So it's consistent with the Fed's long-term goal of bringing rates back up to a normal level. You know, for so many years, rates had been essentially at zero. And so the Fed, starting in December of 2015, raised rates 25 basis points. And then again in December of 2016, they raised it another. But now what we're seeing is the Fed is showing more confidence in the markets and more confidence in the economy. And so now they're starting to raise rates a little more quickly.
So you said it wasn't a surprise. What are some of the economic indicators that created the environment where they could raise rates?
One of the things the Fed has said very clearly, Chairman Yellen has said that they want to be data-driven. So they want to make sure that whatever actions they're taking are supported by the fundamental economics of the economy. And so what they're looking at is things like job growth. Job growth in February was very strong at 235,000. Unemployment in February was 4.7%, down from 4.8%. Wage growth is very strong at about 2.8%. Also inflation. The Fed really pays very close attention to inflation. And while for many years inflation was far below the Fed's target of 2%, over the last few months we've started to see inflation coming up, and it's hovering right around that 2% level that they want to see. The other thing that the Fed is really focusing on is expectations of future economic growth. And Janet Yellen, in explaining the Fed's decision to raise interest rates, said they feel that the economy will continue to grow strongly, that it will continue to maintain the kind of growth that we've been seeing in the last few months into the future, which would mean that the Fed has more room to grow and to raise interest rates.
So how many times do they predict to raise rates this year, or will they raise rates again this year?
So there's a few ways to look at it. Number one is the Fed's official forecast. And then the second is kind of what markets and economists expect. And what's interesting about that is that over the past several years, the Fed has indicated a willingness to raise rates several times, but then hasn't been able to do it. So in 2015, when they raised the rate the first time, they said we're going to raise rates another 4 times in 2016. But because the fundamentals weren't there, they could only raise rates 1 time. This year, when they started raising rates back in December of 2016, they said they were going to raise rates another 3 times, so another 75 basis points in 2017. What's interesting this time is now markets have essentially said they expect the Fed also to raise rates 3 times. So the expectation is that with this one rate that just recently happened, that there should be another 2 interest rate increases in 2017. A lot of market participants are putting that next rate increase maybe in June or in the summer time frame, and then maybe that third one later in the year around December. But the big thing to keep in mind is it all depends on those economic fundamentals. Will the economy continue to grow? Will things continue to look good? And will expectations continue to be as high as they've been in the past? And that's what everyone's watching.
So in your opinion, if we stay on the same trajectory, we should expect to see the raises that they have put into their forecast?
Yes, we should continue to see the Fed getting more aggressive with their interest rate increases going forward.
Great. Thank you, Robert. And thank you for joining us for this economic update. For more information and analysis, please visit zionsbank.com/economy.